Ladies and gentlemen of the crypto space, we're live at 11:34 a.m. Wednesday, January 6th. I am late. It's not often. Very busy morning, but let's get this show on the road. Noah Talks Crypto January 6th. That's the title of the stream. That's the best thing I could come up with. I'm literally running around trying to do this. I can't even begin to describe this morning. Today's episode, along with all episodes, is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see what's going on. Heirlooms in the house. Always a pleasure, my friend. Captain Weber. Yes, sir. I'm actually literally looking at what's going on right now, real time, with everyone. Let's take a look at the charts. So Bitcoin looks really good. So Bitcoin, this top green line is the resistance of the basically this large, relatively macro or decent duration ascending channel. This is a nice. This red line going up is a nice support line, higher lows, and as of right now, it's been respecting it. It respected it here. It respected it here. A little bit of a short-term W. So this could be bullish. I mean, hell, we're above 35,000. I don't see any reason to be complaining. We got green guppies. Let's spread it out a little bit. And let's see how that plays out. There's nothing really bullish, overwhelmingly bullish going on with the price action. There's nothing that's explosive, no irrational exuberance or significant money inflow, although the MFI is nice and high. Stoke is high. RSI is towards 60. But I don't see any explosive upward price action. But with crypto, that happens quick. And Ethereum does look like that is exactly what's occurring. Ethereum is likely outperforming. I don't have the Ethereum BTC chart up at the moment, but I believe Ethereum is outperforming. This thing has ripped through these series of higher lows. It was definitely an ascending triangle. It broke out. What's so nice about this? You guys know what I always show. I'm going to zoom in on this. You guys got to see this. So if we zoom in and we focus on this, you guys know that little drawing I always do. Break to the upside, retest, and a higher high. Bam! Oh, isn't it gorgeous when that happens? Yeah, let's take a look at WCREST. Is it doing anything? That's cool. I have a bit. I think I have 100 of them. We'll take a peek. But look at this. Damn, Ethereum is really ripping right now. 1,191. That is definitely clearly a higher high, no doubt. But let's pull out a little bit. Let's look at the macro. Let's see what's going on. Let's go to the 4-hour. Let's see where we are in the big picture. Boop, 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 boop. Boop, 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 boop. I mean, that's a heck of a rip to the upside. It's relatively quick too. So, but that's what's going on in the crypto space. Look at that, getting towards higher highs. The ways to go, but what I would start doing is putting in this. I'm going to move the green line. A break of that green line right there. That was that peak back there. Let's zoom in real quick and see what we can do. Give or take, it would take some time to draw the chart. What was that? 1239. You rip the 1300 and you got some serious bullish momentum going on, and that'd be great to see. But this thing is definitely great to see in its current form. So what happened overnight? U.S. dollar versus the Chinese yuan was breaking down. There was this massive rip to the downside, but pretty much all evening it was in this triangular compression, lower highs, higher lows, and then it broke to the upside. Same thing with the DXY. This red line is multi-year, 6-year trend support. No, I'm sorry. That was for the USDCNH, but this is the support of a falling wedge. We thought it was going to break down from a falling wedge at some point, which would be very unexpected. Falling wedges tend to be a bullish formation, indicative of likely a trend reversal. So this is not expected, but this is definitely interesting. Chart tells the story. Chart tells that the dollar is hanging on. It's clearly bearish if it's in a falling wedge and it's near support. And the same thing, this green line down here. This green line is the 6-year trend support. So a breakdown of this green line or a breakdown of this red line is significantly bearish for the U.S. dollar. Gold has broken down a bit, fell back through. No, we're on the daily, so obviously we could have a rip to the upside, but this is clearly trend resistance, and it broke out, and now it fell back in, making it defined as an aberration, a temporary departure from the norm. One other chart I got up is 1 inch, clearly broke out to the upside. We had a series of lower highs. It broke to the upside, broke through the most previous higher high, and that's quite indicative of a trend reversal. So just like with the Ethereum chart I just showed you, what you look for is a break to the upside, a retest, and then a higher high. And that is obviously a great sequence of events. It's not necessarily the only way. It could just keep going up. It doesn't have to necessarily retouch the previous resistance, flip support. It could just keep going. You don't have to have a retest. So let's check the screen. Crypto Monk in the house. Mickmon, isn't it odd that keepers don't take their keep it out profits but take Rook instead? No, that's not the way it works. Rook is emissions. That's the DAO asset. And the yield, no, not keep. It's a keeper. And the yield that you're seeing is basically from there's a deposit fee, which encourages you to keep your assets in the exchange. In providing liquidity. So the only yield you're getting is from that deposit fee. You're basically getting no yield. But this APY is obviously denominated in Rook. So the Treasury, which I closed because I was running out of memory, the Treasury is not emitted yet, guys. Mickmon, this Treasury, none of this has gone to the liquidity provider. So on February 1st is when we're expecting significant progress, meaning the DAO hasn't been formed, Rook holders don't vote. Theoretically, there's likely to be an entire DApp to manage the DAO and vote on these things, on what decisions to make, so on and so forth. So I can only imagine what the devs are up to. We're speculating at this point, but this is a cash machine. It's printed $10 million in a little over a month. So why not scale it? Why not further incentivize keepers? Why not expand on the functionality and the way keepers generate revenue and then further incentivize liquidity? So you can imagine, I think this is the beginning of a very significant DAO and money generating operation that is far from mature. It's barely in its infancy, and what's important to note, as always, it's speculative. It is centralized. It is not currently controlled by the decentralized DAO participants, the Rook holders. So it's premature in that regard. So with that in mind, that this is a quite risk-on asset, albeit this thing is ripping. It's at $180. Last time we saw it was at 70. It's up way over 100%. Oh, that looks. I'm telling you, it looks pretty. I don't have the largest position, but it has grown from I don't know, like 0.1% of my portfolio to like 0.4, 0.5. Very good to see. Very good to see. Nickmon, it's like they profit twice. Well, it's complicated. It's a whole bunch of unknowns, as I said, how the DAO is going to form and the yield is going to be distributed, and the other things I mentioned. What's up, Dave? How you doing, Brady? Always a pleasure. WCrest, let's take a look real quick. Where can I look at that? I guess we can look here. I believe this is WCrest. I believe. Oh, look at that. What? Look at that. Rip to 538. Wow. How do you like them apples? Let's go to the daily because this thing was up higher. It was up at 8. So that's a nice rip to the upside. I don't have a large position. I think I just have 100 of them. So, maybe one day this will be at $1,000. So they got 100 grand. Yay. They're small bets. Look, if it does that, if it goes to $100, I got 10 grand. Lovely. Yeah. That's what I'm talking about. DGB looking nice. Let's take a look real quick. This chart should show us the falling wedge. We're on the hour. Oh, no, it looks all right. It's got to break to the upside of this falling wedge. So let's zoom out. So this is a large falling wedge. So it needs to break out. It has not reversed trend direction yet. So this is significant resistance. I mean, look, you got the 4-hour 200 EMA above it. So a breakout could potentially be explosive considering trend resistance, falling wedge, and the 4-hour 200 EMA is right on resistance. So a breakout would be really cool, but as of right now, that is significant resistance, and it can break down, find support, and keep going for a fair amount of time in this wedge formation. Does Rook continue after February 1st? Rook does not. Rook emissions are complete, to my understanding. This is a distribution period in many regards. This is their emissions. This is how they're distributing Rook to the ecosystem. Yeah, but I don't think it changes, Dave. It changes to my understanding. Dave, do you think the Senate stuff today? What do you mean going forward, especially for crypto? Dems spend more, crush dollar. Yeah, that's basically the deal. So there's going to be a whole lot of political instability going on. Who knows what's going to go on with regard to civil unrest? I believe at some point that the government's going to have to finance civil rest, which is an interesting statement. People are angry, and there's only one thing that listen. If you're rioting and you make $250,000 a year, $500,000 a year, you're probably not rioting. So I know people are angry, but when you're broke, you're really angry. So if you're not broke and you have to wake up tomorrow morning at 6 a.m. to go to work because you're making $350,000 a year and you're driving a brand new Model S Tesla to work and you live in a 6-bedroom house, the odds are you're not rioting. So I think at some point the government's going to have to finance civil rest, not the opposite of civil unrest, and that's the Dems are just going to print. They're going to print the $2,000 stimulus check, which is still a joke. It's going to solve nothing. There's systemic malfunction all over the place in the economy. I don't know. I don't know how it's going to play out. I know that there's risk all around. But what I do know is the deficit's going to go up. They're going to print. We have the US OCC with their banking rules where the banks could utilize public blockchains. So as I speculated the other day, banks could potentially find it an opportunity to secure proof of work networks or participate in proof of stake networks and use them as infrastructure. But Rohan Gray thinks that it's for banks to control those properties, and he is way smarter than me. But that is obviously an interesting debate. I think that no idea is a good idea unless there's a counter idea and a rational, logical debate for or against possible ideas. So there's overwhelmingly merit to the potential for banks to find an opportunity in securing public networks, either via mining equipment for proof of work or large stake positions for proof of stake, and utilizing them for their functionality, or maybe even participating in the development process to expand and advance these systems for the benefit of the corporation and their profit goals, as well as basically as a social utility. This is public infrastructure, as I often describe DigiByte, but that's really the case for countless public blockchains. I meant continued distribution. I don't think they do. I think the emissions period ends on February 1st, but that's just me. I'm not 100% sure of that. Crypto Monk says, what are your top 3 protocols for getting yield on something like USDC as well as non-stable coins? Curve is a big deal. Celsius is giving you 10 and change percent. Curve, you could get big. You get 60% on. You get 60% on Curve, or you're looking for one of the liquidity pools on Uniswap, possibly 1inch and Mooniswap. I mean, listen, if you're still 1inch, so if if you have a balanced quantity of value, like 5 grand in USDC and 5 grand in Ethereum, you throw it in the 1-inch liquidity mining pool. So you go over here, and well, do they have a USDC pool? Yeah. So, all right. So their liquidity mining is denominated in 1-inch. Albeit 1-inch is ripping, as I just showed you guys. So that's considerable. So I'm not providing any liquidity at all. I have my assets in governance, which is producing a lot. I mean, this is probably producing like 10, 15, 20 1-inch per day, which is pretty interesting because it's $1.50. So you're talking like $35, $40 a day in governance. That's crazy. That's some serious yield. It's like 30, 40% yield. So if you're curious about 1-inch, you can provide 1-inch and any of these assets, and you're going to get some very meaningful percentages. But then you take those LP tokens, and you're going to get 400%. 354%, I mean 520% for 1-inch USDC. And that yield is denominated in 1-inch, and 1-inch tokens are basically, I think, in the process of a complete trend reversal, as I showed by the resistance flip support. Let's drop it down to the 30-minute and take a peek. What's going on? So that's what we're looking for. Look, it ripped to the upside, broke for the new higher high, and now you see the red candle, which is a retest. If that holds a support, and then you put the new higher high, that's the type of thing we just saw with Ethereum. Where is it? Oh, ultra short term. I gotta find the chart. Oh, sorry guys. Expand, 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 expand. Yeah. So the break to the upside, the retest, and the higher high. 1-inch clearly it went up. Now it needs to come back down and flip to the new higher high. So there's potentially potential speculation that could be done with the 1-inch asset. Is it going to appreciate? Speculatively. I think there's a big role for these. It's a wonderful DAO, and the governance is continuous. The emissions of governance reward. This is a very impressive implementation, at least on the surface. I don't know from the technical details in the contract implementation, but at least on the surface, it's impressive from the presentation, as well as the way we are receiving rewards and emissions from a participant perspective. Absolutely interesting. Definitely something to consider. Bancor's throwing out yield. Bancor's throwing out yield. Well, who else? I don't even know who's providing me yield at this point. You go to Zapper for that. I don't want to load my whole portfolio. Everything's just going straight up. But you go to Zapperfy and you can see a fair amount of opportunities. Curve, I mentioned, but you could consider being a VE curve holder in addition to providing liquidity. The safest thing really is Bitcoin and probably like Celsius. So many shows ago, I showed you guys MakerDAO and that I was leveraging my collateral, Bitcoin as collateral, to participate in a Curve liquidity pool. I've exited that position. All things considered, with what's going on with the market, what's going on with politics, I wanted to take risk off the table, and now I'm just holding in a cold storage. I think Bitcoin is just going to experience asymmetric returns, life-changing gains, and I don't need to have my assets. It's not excessive risk, but there is risk associated with the WBTC contract, the REN-BTC protocol, the Curve Smart contract, so on and so forth, as well as the MakerDAO contract. So I just wanted to sleep more comfortably at night. Always remember the most important thing is you actually have to be able to sleep comfortably at night. Swissborg, no idea. I've heard of it. No idea. For yield. You're welcome, Crypto Monk. What do you think about Sushi? Well, there you go. There's yield also. So Sushi has a lot of liquidity. I don't really look into it because I can't be spreading too thin. I mean, Sushi has its token as well. I get turned off by its history. I get turned off because it's a zombie protocol based on on Uniswap. So and I don't need to. I just literally I don't have any incentive whatsoever to really look into it. Is it likely lucrative providing liquidity to one of the pools? Possibly. Is it likely lucrative that the sushi asset itself could appreciate? Yes. So these are things that we all have to consider. I mentioned this morning, as I often mention, you'll never be able to own all the assets you want to own. It's just not going to happen, boys and girls. This like I'm just tickled pink by synthetics. Um, $12.96 and synthetic 1271 just dipped a bit, but this thing just rips out yield. And to top it all off, when you mint SUSD with your synthetics, you have SUSD. So you could take that SUSD and buy SF. So now you're literally taking your synthetics, you're getting yield on your synthetics, and you're taking your SUSD and you can store it in Ethereum. And hopefully it outperforms, and the odds are over enough time, Ethereum is going to outperform. And that's the whole point. So Synthetics is a massive opportunity. It's about to roll out its optimistic L2 implementation. I believe on the 15th of January. That's massive, massive. I think Curve, Synthetics are going to be on fire with activity, a frenzy of activity because of what you can do with synthetic assets and the synthetic platform and the trading that they offer. It just could turn into an absolute frenzy. And guess what? When you're talking about liquidity, you're talking about Curve. You're talking about stablecoin. You're talking about the Forex of the crypto space, where you could take a variety of stable assets and, be interoperable. And that's just massive. The potential is just tantalizing. Do you hold Aave? So Aave does pay yield, and I hold Aave. I don't have a large position. Dashboard. I have some Aave in Bancor protection. So I have 15 Aave in here, which produces nothing, but it produces a little bit of BNT emissions, and you can see those BNT emissions on the data page. So I got 1,000 BNT in here producing 100%. It was more earlier in the process, but Aave is producing 63%. And I do also have some Aave in the security module, the staking. So you go to Aave.com and you go to stake. I have 25 Aave in here. So this is a relatively small position, but so yeah, a little bit of Aave, guys. Aave. So this is a perfect example of something that I can't own more. I want more. I want 1,000 Aave. I can't afford it. I think the potential for Aave is just astronomical. These boys could take on the banking system in the coming years. This could be a major global financial system. This is huge. In fact, I applied to work for them. That would be awesome. So Aave has, what is that, 5%, 4.77% emissions there, and Bancor's thrown out 63% denominated in BNT once they get that through the DAO process. Any news on RenDGB? Yeah, it's coming. It's already live. So the mainnets, the dark nodes process RenDGB, but the bridge needs to be updated to support it. So bear in mind that doesn't really mean anything, because if you can mint RenDGB, what are you going to do with it? The whole reason that there's such a frenzy over Bitcoin, WBTC, and RenBTC is because Aave, MakerDAO, Compound, and basically the entire DeFi space at this point supports RenBTC. It didn't at first. But now it does, and WBTC even more support is there, and that drives the demand to convert Bitcoin into WBTC or RenBTC, because you could generate yield in the DeFi space. So you need the other side of the coin. You can't just It's not just that you need the way to mint RenDGB, you also need the protocols to accept it as collateral. But you could always just provide liquidity on Uniswap, RenDGB versus DAI, RenDGB versus Ethereum, but who's going to want it? So these are interesting questions, and the only way you know how it plays out, how it unfolds, is once the bridge has it, and maybe a protocol provides incentive to provide liquidity. I don't know. Best thing Aave did in 2021 would be to hire you. Thank you. I'm an Android developer. I dabbled with I played with React Native. I played with Flutter a little bit. I'm not a professional in them, but I am overwhelmingly a professional in Android development. I've been doing it for 11 years. I started in 2009, and if they need that kind of experience and professionalism, that would be a pleasure. I would love to build, or you just manage mobile, because I have 11 years of mobile development, not just Android development. I have a capacity to manage teams of engineers, structure who does what kind of work, assessing skill sets, managing time. So that'd be interesting. I'd love that. Always a pleasure, Brendan. You're welcome. Wake me up when Eth1 ends. Yeah, right, Big Man. Eth1. I mean, it's coming to an end. In a year or two, it's inevitable. Something's going to change, but what you need to do with regard to markets is you need to play the market as it is today. You speculate on the future, but this goes into the portfolio construction I always talk about. You speculate in the future, and that should only be a small percentage of your portfolio. The vast majority of your portfolio should be risk off, and because that's today. And if you're speculating on today, then you're day trading. So I am a very risk adverse person. Protect your gains, and you're going to make an astronomical amount of gains just holding Bitcoin and Ethereum. So you don't have to. Most people don't have to take as much risk as they're taking, and that's the point. Have you done in any past videos gone through how you set up your positions on Curve? Yeah, assuredly. I don't know which ones. I don't remember at this point, but assuredly. I mean, um, there's not much to do on Curve, so you just go to Curve, just simply enough. Your wallet, your MetaMask connects. You pick a pool. This pool is generating 32.68%. You click it and you click deposit. And drop 10,000 DAI in there, and you're going to get 30 something percent per year. That's going to be denominated in Curve. And then you can use the 8 tax. This gives you 1.5% leverage. This is Yearn Vault, or a component of the Yearn Vault, written by Banteg and Andre, prominent DeFi developers. There's very much reason for it to be 1.5 leveraged, 1.5x leveraged, and you have a little bit of YVE curve, but then the VE curve. And then you could take CRV and lock it for VE CRV, and then you get yearly emissions. This thing's throwing out $7 grand for. Listen, if this thing it's doing $241 million a day, if it's doing $2 billion a day, bam, I'm making 70 grand a year. If it's doing $20 billion a day, I'm making 700 grand a year. So what's $20 billion a day in a global financial system that deals with countless trillions of dollars a day? So I think VE curve is a great speculative position. Speculative. Always remember what I talk about with regard to risk analysis, and don't take on excessive risks. Don't over position size, boys and girls. All right, I'm going to wrap this up. 12:03 p.m. on a Wednesday, January 6th. Be safe out there. If you're anywhere near civil instability or civil unrest, stay away. Just remember, we're smart folks. Talking is what's important. And the show will be on TV, I'm sure, and it's going to be a heck of a day. So I wish everyone the best. Thank you all for joining. Smack those thumbs up buttons. Tell everyone to subscribe, and I will see you tomorrow. You all have a good one. Peace.